All right, good morning, everybody. How you doing? Welcome to Forex.Today. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Poland just released their unemployment rate, 9.2%. There goes the zloty. Well, maybe that's good. I don't know if that's good. Oh, April was 9.5, so that's a huge, significant increase. Yeah, third month in a row of improvement. Good job, Poland. Anybody here trade the Polish zloty? Yeah, me neither. Okay. Good morning. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. We're a broker, you're a trader. Let's fall in love. You pull the trigger, we execute. Perfect. Sally Pup can't even say zloty. I don't even know if I'm saying it right. So anyways, we do these sessions 7:30 in the morning every single day, Monday through Friday. Monday through Thursday here at Forex.Today, and every Friday at FX Street, where I'm also Forex Speaker of the Year. The overriding goal of these webinars is to help you develop skills and trading habits that lead to your long-term profitability. It's about skills. And so I truly hope you find success. And when you do, that you'll choose TradersWay as your broker. What's going on in the world? Nothing really. It's a real quiet week. The biggest thing going on, I'd say, this week is this afternoon or at lunchtime, Janet Yellen is speaking, and she's going to clarify what's going on at the Fed in regards to the horrible non-farm payrolls that we had on Friday. June's off the table. What about July? What about September? Okay. Yes, some piece of news came out of Australia. It was a 3-month low. Doesn't seem to be a good thing. Fine. A report from a Fed watcher over the weekend suggested that June is now almost surely off the table for a rate hike, and July is still possible, though less likely. The futures market for Fed funds rate see less than 5% chance of a rate increase in June, 31% on a move in July, and 8% in September. I would say either September or December. Probably December. Yeah, December is what I'm thinking. Pound dollar was under severe strain, with a number of Brexit polls showing that the camp in favor of Brexit is picking up support ahead of June 24th referendum. So, up, down, turn around, right? So just it's wave after wave after wave of up, down, up, down, up, down. I'd be careful in situations like that. Everybody loses money. So use your stop loss appropriately. If you got some profit, lock it in. And before you pull the trigger, make sure you calculate how much risk you're willing to take, aka how much money are you willing to lose if you're in the middle of a good trade and then suddenly, boom, the pound spikes because somebody somewhere said something. Right? So be careful. So Ben, over the weekend, watched the OECD economic outlook video. Right on, man. You're moving in the right direction, Ben. So thank you for taking my advice. I hope it was worth your time. I know that's a big investment because your time is valuable. Okay, then during the European session, Deutschland factory orders, aka Beamers and Mercedes, and I guess they make other things. I mean, actually, Germany's a huge exporting country. So anyway, so factory orders month over month, -2. Well, that can't be good. Yeah, -2. Nine! Right? Das not gut. Yeah, that can't be bad, or it can't be good. So factory orders negative month over month and negative year over year. We can't even beat last year. Last year couldn't have been that great. So, anyways, that doesn't seem very good, right? I wouldn't call that pro euro. German construction PMI, who cares? European Eurozone Centex investor confidence. Okay, that came out good. I don't even know what that is. Who uses that? I don't know. So, anyways, 9.9 versus 7. Yippee. Okay. Now, the thing that happened, sort of this European morning, Asia closed kind of thing. The yen softer as Japanese officials continue its verbal intervention. Finance, right? Vice Finance Minister of International Affairs, right? Reiterates that the government was closely watching FX moves. Uh-huh. So what? So anyways, that props up some of the commodity currencies, right? If they were going to intervene. CAD really, picking up off the bottom off of a CAD yen support. I don't know if you were eyeballing 82, but anyways. So that's on some people's minds. I try not to pay too much attention of intervention. If you're worried about intervention, just don't trade in the direction that would be opposite to that move. But betting money that they're going to intervene is a fool's game, right? A game of fools. Oh, and remember this little stone on my desk. It's a piece of fool's gold. Make sure you're not in the business of hunting fool's gold. In the U.S. session, Yellen speaking at 12:30. Real quiet week. Yeah, real quiet week. So let's go through the calendar then. You got RBA tomorrow or today, tonight, wherever you are in the world. RBA coming up on Tuesday, Asia time. The EMU GDP, that's obviously going to be interesting, right? So I'm over here, by the way. So RBA, and then excuse me, GDP. Now this UK news, nothing's more important than Brexit, right? So Brexit. Pay attention to all that kind of stuff. Tomorrow in the New York session, IVPMI, right on. That's a good one for Kitty Cad, right? No, consumer credit. Oh, forget that. Aussie home loans, nah. Okay, industrial production out of the UK on Wednesday. Yeah, okay, maybe. Like I said, Brexit, even more important. Then on Wednesday, which is, Wednesday New York time, so they're Thursday, so it depends on where you are. RBNZ, Reserve Bank of New Zealand, they got their thing going on. That's going to be another good one. Machine orders, I think this is going to be a good one out of Japan. Any guess why? Yeah, there was an earthquake, so if anything got damaged, it would need to be replaced. But then, right, CPI and PPI out of China, boom and boom. So you see the trend going on here. Not much news in the United States. Not much, news that's going to overpower Brexit stuff in the European session. But back to back Asian sessions. Where are you going to make your money, honey? Okay, that may be worth it. All right. If it's a struggle for you to do Asia, well, maybe this week it's worth it. Okay. Swiss unemployment, German merchandise trade, Italian unemployment. Okay, blah 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 blah. U.S. wholesale trade, Fed balance sheet, forget it. Japanese PPI, don't worry about it. There's no inflation. And then all the way to Friday, right? Okay, so maybe Japanese tertiary, pay attention. German CPI, yeah. Do you know their 10-year T note, their 10-year note, their 10-year bond is 0.1%? The United States 10-year T note is pathetic. It's 1.7. Germany, comparable, 0.1. It's really amazing that the German 10-year could even conceivably drop to negative. I mean, 10-year. I'll put this in perspective. In the heart of the financial collapse, I actually did a discussion in a sort of a training event where I was teaching people yield curve analysis. And it was my opinion at that time that it was impossible for the U.S. 10-year T-note to drop below 2%. Actually, there was a time when I thought that would be impossible. Because other yields, like on repo rates and overnight rates, 30-day treasuries, like money markets and stuff, would be negative. And I'm like, well, it can't go negative. I mean, because, it can't. The world wouldn't function. Everything would fall apart, right? All the sprockets would be misaligned if you have a Newtonian view of the economic world, right? 10-year, right? So that was 10-year T-note couldn't possibly go below 2%. Well, of course, it did go well below eventually. But to think that I thought 2% was, the floor. How about 10-year T-note out of Germany, 0.1? Just inconceivable. So I'm just trying to put it into perspective. If I thought 2% was impossible, well, how about 0.1%? Just inconceivable. Just end of the world kind of stuff. Amazing. Consumer sentiment at the end on Friday, great. Right? The question is, will the Europeans stay in the market? Right. Don't forget the CAD news, though, too. But yeah, think about it this way. Are the London boys going to stay and trade that consumer sentiment, U.S. consumer sentiment, at 10 a.m. New York time? That's, 4 p.m. their time? Are they going to stay? Well, I'll tell you what. If it's a nice day in London, they're not going to stay. So look up the weather on Friday. And if it's nice weather, they're going to go to the pubs early and no one's going to trade that consumer sentiment number. All right? Because right after that, we're much more worried about the Fed meeting. And then after that, we're much more worried about the Brexit. So why put a bunch of new money on in a thin market going into a weekend, right? Sammy, could you give a short summary on yield curve differentials and their effect on currencies? Yeah. Just bang that out, huh? Someday. I like that, huh? Yeah, it's a good one, Sam. Hey, just quickly, tell me about the unified theory between quantum physics and quantum mechanics, but just keep it short. Yeah. Okay. All right. Quantum physics, quantum mechanics. All right. So, anyways, let's do the happy music and move on to technical analysis. go. Boom, Forex.Today. Now, of course, you're talking about yield curve differentials. So, you know, the basic theory that you'll learn in an economics class or even a finance class, and I know because I've taken both economics and finance classes at Harvard just recently, a year and a half ago, and they'll tell you the higher the yield relative to a second currency, so you're talking about differentials. So 10-year T-note in the United States is 1.7%. The yield on the German Bund of 10 years is 0.1%. Which currency should be stronger? You got it. Money should be flowing to the United States of America. Now, I would add a layer to that because even though my professors have told me that the market is smart and prices everything in and that everything else is a random walk and that you can't beat the market, I would add another layer, onion skin over that and say, well, that you would think that it would be true because we're all educated and smart and experienced and all that kind of stuff as a whole, right? As a whole market, most people know what they're doing when I'm talking about professionals. And so things like arbitraging won't last very long because it'll arbitrage will arbitrage, right? So your opportunities. But I would argue that there's behavioral finance also going on where many people are not as smart as others. Some people are smarter than other people, therefore make different decisions, better decisions, or time those decisions better because they use the information more effectively. But also that other people have other needs and other strategies. Some people are short-term short and other people are long-term long. You know, an example of that is I remember buying the US dollar for an entire year, and every single day it seemed like I was reading an article about how George Soros sold the dollar every single day. Now I looked at my account and I was making money day after day after day. Buy the dollar, buy the dollar, buy the dollar. And then I'd read George Soros sold another million, another billion, another billion, right? And I'm like, well, I'm buying and he's selling. Well, over the course of time, we both made money. It just took him a year to build up his trade. I'm much shorter term than that, so I bought for a year and then I sold for 3 years, and that's it, right? So anyways, you know, these onion layers that the market isn't totally efficient. Not everyone is in on the game. Not everyone is right. You can beat the market on various time frames without relying on leverage to do so. You can scalp profitably, you can spot profitably, you can swing profitably, you can position properly. Okay? So to say that again, the US dollar pays much higher yield. So the yield differential is 1.6% between the German 10-year and the US 10-year. And the market believes the Eurozone or the ECB is nowhere near even thinking about raising interest rates. They're still doing quantitative easing, which means they'll need to taper and then stop. And then maybe a year later raise interest rates, right? So we're nowhere near that. And yet our discussion is, will the Fed raise interest rates in June? Or will they raise in July? Or will they raise in September? Or will they raise in December? We're talking about when will they raise? And yet, the US dollar is significantly weaker than the euro on the short term. Now, why is that? What happened to the yield differential idea? It has to do with the timing or trend relative. So not just the interest rate differential. For example, what is the interest rate on the Aussie USD? I mean the Aussie dollar. 1.75. That's the short-term interest rate. Yet the US dollar's crushing the Aussie dollar on the longer term, crushing it. Because their trend is lowering interest rates, the US dollar trend is raising interest rates. So even though the Aussie pays more than the USD is stronger. Ciao. But you can't explain that to a university professor because it doesn't say that in the textbooks. Okay. So anyways, let's do some technical analysis. Yo. After non-farm payrolls, silver went up. After non-farm payrolls, gold went up. Look at the bounce on the monthly central pivot point. Another coincidence, right? Another coincidence, right? Yep. Random walk. What about oil post non-farm payrolls? Right? It's almost like nothing really happened. Anyone can see. Nothing really happened to WTI. Yeah, so there's the low. Is it lower than the previous day's low? No. Did we make a high higher than the previous day's high? No, we ended up getting an inside day. Amazing, right? Yeah, how's copper doing, Roger? Yeah. Well, you got to figure out who's buying. So, like in the beginning of the year, there was an iron ore rally, 60% from the bottom, and then of that rally, 30% has been given back. So there was a bit of stockpiling by China earlier in the year, and you could see that in the Baltic Dry Index, the BDI. S&P 500, up, down, turning around, nothing really happened. Up, down, turning around, nothing actually happened. So anyways, we're still up here by this giant X that we drew when it was way down here. Okay, but horrible non-farm payrolls. Did the stock market crash? No. But remember down here when I drew this giant X, someone was asking about the imminent crash. It was going to be the end, you know, and I said, crash? And I started talking about like this 3 or 4 or 5 or 6 different things I would look at before I would consider a crash coming. I'm like, none of those exist. Sure enough, someone saw the down as a buying opportunity. So you would think after horrific non-farm payrolls, we missed by over 100,000 monthly jobs. I mean, just redonkulously bad, right? What happened? Nothing really. So would you say that is bullish or bearish for the stock market, having seen what happened on Friday? Yeah, because if you wanted to get out, and by the way, I don't know if you do read the newspapers and stuff, but there's a lot of bearish stuff in there, right? And yet, the smart money, if you will, you know, it isn't that bearish. And I think if the market was truly bearish, they would have dumped everything hard on Friday, don't you think? That you've been waiting for the crash, waiting for the crash, waiting for the crash, waiting for the crash. You're basically at all-time highs. You're at a huge top. The world's going to end. The world's going to end. The sky's going to fall. Horrible non-farm payrolls. You would just dump everything, right? I knew it. I knew it. It's the end. Dump everything. Run, Forrest, run. Right? No, the market didn't behave that way. So what did they do with the money? That's what you got to follow. Follow the money. Money said, hey, well, no reason to dump it. That's very important. There's your market sentiment right there. Okay? So I think that all of that's very interesting. Okay, let's start with the Aussie dollar. Oh, I lost my mouse. Hang on. There's my mouse. There it is. All right. Try that again. Let's do the Aussie dollar. Nice little drop. I don't remember drawing this. Do you? When did I draw this? This is Thursday. Did I draw that on? I totally did, didn't I? I drew this the day before non-farm payrolls. Sure do, Fred. Aussie ends like peas and carrots. So yeah, look at this. This is an interesting pullback to the psych level and drop it. Huh. That's pretty interesting. I missed that on Friday. Good analysis though, Wayne. All right. Nice. Like that. Never made a follow through though. And this is the intervention that I was talking about earlier, that there was chatter in Asia about, eyeballing intervention. So that could be very interesting. Huh? How are you going to play this? You better make some decisions today. Okay? So are you going to treat this as a double bottom? What do you need after a double bottom before you start buying in a downtrend? Higher high, okay, and then what? What's your next move? What do I teach you? WWWD. Double bottom, okay. Higher than that high. Fib it. Correct. Zoop, zoop, zoop would be textbook. Okay, whether that happens or not, that's up to you. Someone might have fibbed this. This 382 might have been enough for someone else. Someone might be saying, intervention, intervention, intervention. Okay. Now there's Crazy Ryan. Haven't seen you in a while. PJK, PJ Cruiser. Wow, look at you guys, man. Haven't seen you guys in a while. What's been going on? Have you been here? Okay. Excuse me. I'm cruising, I'm bruising, I'm never, never losing. Round the ways where I'm from, and I'm from Manhattan in another blue. So you got to, decide what you want to do and set it up. And what kind of trades are we looking for on a Monday? Swing it, right? Now be careful. Well, it might be an opportunity. So how about this? Take the trade you want to trade based on your analysis. And make sure you move your stop close or to -1 or whatever before New York lunch. And you'll either get knocked out when Janet Yellen says something, or you'll make a ton of money when Janet Yellen says something. Fred. That's funny, right? You can't. You're not. You can't be. You're not going to be paid to be a spectator, right? What do spectators do? They pay to watch, right? So you want to watch the NBA finals, right? You want a seat right on the floor seats, NBA finals. How much is that going to cost you? Yeah, $10,000, right, per seat, unless you're on the team, and then you make $20 million a year, even if you lose. But if you win a lot of games and you have a funny haircut or something, then you'll make another $100 million in endorsements. And then if you actually win the NBA Finals, you get huge bonuses and you're super fame, and you make $500 million in endorsements. But if you're a spectator, you pay $10,000 a night. You should probably just be on the team and play, right? Might as well just play the game. You're going to watch either way. Then go home and practice those free throws, man. Right? Get that backspin. Let it hang. That's right. All right. So you. All right. So where are we here? Well, it looks like we already had this planned out as support, so that's kind of done. So monthly support 1. Huh. Well, that's interesting, isn't it? So let's say you're a bull. You want to hold some Aussie. You want to sell some yen. Okay? And it occurs to you that you're on monthly support 1 as a bottom. What is your target? $82. But Wayne, we're at 78. Oh, I know. Bottom's at 78, target is 82. Monthly support 1 to monthly R1, resistance 1, MS1, MR1. Also, notice that it's a cluster with weekly R2. So monthly resistance 1 with weekly resistance 2. Well, that's interesting. It also tells me that we might hit it this week if it goes all the way up, but it could be next week. Now, how would I see that? Well, M2, which is also our cluster bottom, predicts M4 as the top, and it seems to be weekly and monthly resistance, as well as kind of eyeballing pretty close to that top. So I would think it would be, price action would kind of do this week, and then top out, and then down to next week's central pivot point, and then maybe eventually work our way there. And maybe that's next week's weekly M4 monthly R1 cluster. Matt Damon is giving a graduation speech? Oh, vey. When did he win the Nobel Prize? And golly. I mean, think about it. What kind of world do you live in if you start taking advice from a Hollywood actor? Oh no. Oh no. Well, he did play a smart guy in that movie once. All right. So let's move on.com. I want to talk about the support on Kitty Cat. Hey, I like Matt Damon. All right. And speaking at next year's commencement, we will have Lady Gaga. All right, so we got something going on in here, right? Now notice way back in February, we had planned this out to drop to a double bottom, make a higher high, make a higher low. Just a double bottom, 1, 2, 3, just like we did on a different currency pair on a different time frame. Right? Does this qualify as maybe having happened? I mean, obviously the timing is not perfect, right? But doesn't it seem like we could it kind of did it? We redrew it this way. I mean, sure, okay, so it took 6 months, but I told you it happens that way, right? Wouldn't it be interesting 6 months from now if we were at a higher level? Now, that was our plan, right? Can I confirm that? In January, we were planning the double bottom, higher high, higher low scenario so that we could be long in the second half of the year. Was anyone around in January to plan the drop, which would then precede the higher high, which then would precede the higher low, which then would precede the next higher high rally into December? Are you telling me in January we were talking about and actually planning what might happen 11 months in the future? Is that right? That can't be right. 11 months in the future. Is that what you remember? Mm, 11 months? Well, I remember being that way because I was there and it was also my plan. And it's also still my plan. Did you know I was smoking a cigar, doing research over the weekend? I read, I don't know, 30 articles and reports and various things on my weekend. That's why I like to have a big old fat, juicy, leathery, chocolate cake, nutty cigar. And I was thinking, in the next 60 days, I'm going to look to corner the market on the Japanese yen. I mean, I'm actually counting the days. And I'm sitting there puffing on a cigar thinking, I can't wait. The yens have been strong. This is awesome. Now, history doesn't always repeat, right? What does history do? What would Matt Damon tell you? All right. If history doesn't repeat itself, it certainly does rhyme. Thank you, Dan. Now, do we actually know who said that? I don't think it was Matt Damon. Does anyone know the quote? All right, but if it does, so anyways, history has taught me that June and July is a little too early. But it seems to me year after year after year, I try anyways. And year after year after year, I get busted out, basically break even, I don't know, 10 or 20 times. Doesn't matter. Doesn't bother me. It actually does bother me, but I try not to let it bother me. Actors are sort of businessmen, right? Let me drop some names because it makes me look like an arrogant SOB. I'm staying at the Waldorf Astoria Towers in Midtown Manhattan. Very exclusive hotel. And I get in the private elevator in the private lobby of the Waldorf. And who comes in the elevator? Brad Pitt and Angelina Jolie. Yeah, it was kind of interesting. So anyway, you're saying actors are business people, right? So they were at the what is it? The Soho Film Festival, the one that the big famous actor does. What's his name? Al Pacino. Is it Al Pacino? No, the other one. De Niro. Robert De Niro's film festival, right? It's in Hell's Kitchen or Soho or something like that. Anyways, they were there, and they're just shooting the breeze on the way up. And, it's like a, 20-story elevator trip, right? Me, Angelina Jolie, and Brad Pitt. And anyways, they were there, and they were just doing business. And I just watched The Curious Life of Benjamin Button. And then maybe 6 months earlier, I'd seen the Angelina Jolie movie where she's there about how like children are hacked up into small pieces with knives and axes and saws. And I was gonna like say, hey, Brad Pitt, that was a great movie where you were born an old man and you died a little baby. And hey, Angie, that one where little children were hacked up, that was also good. But then I decided to just keep my mouth shut. And so I listened. They were just talking about how they were just networking and setting up all these new business, these new deals. They were just working the crowd. And then who knows, like 3 days later, they're probably back in Zaire in Africa where they live their, abnormal la land lives, right? But yes, they are business people. Sure. The ones that are successful, right? I'm sure treat it like a business. So there's my name dropping. Yeah, the successful ones. Yeah, some guys and gals, they have careers because they're good looking, and then they get old and fat like me, and then that's the end of their career. Sam, you are planning yen weakness. Would you say there is a chance yen gets strong? Yeah, of course. There's a chance of anything, Sammy. And a weakening yen usually indicates a growing macroeconomic environment. Or lots of hedge funds betting. So one of my things, like, I try to explain things in a way that makes you think and hopefully not just force feeds you my opinion. So let me go back to something I've already said today. And, the string of pearls clicks at some point, right? And maybe, just maybe, all the hammers line up eventually. What did I say with the S&P 500? What did we talk about today? Not crashing. Yeah, not strength, Sally Pup. I didn't quite say that. But definitely what Dan said, definitely not crashing. And there was an opportunity. Sir James says bullish technically. Well, I wouldn't say that either. That doesn't look technically good at all, right? So let's and I'm being very critical on the language here, but I like neuro linguistic programming and stuff, right? So you got to say it right. In this case, not bearish when there was a huge opportunity to be bearish, and the bears did not show up, which tells me or leads me to believe there are not actual bears in the market. Or to say differently, lots of people are nervous that this is a top. Lots of people know the economy is not growing as well as it could be. But at the end of the day, it's the best in the world, and there's trillions of dollars on the line, and nobody wants it to go down. You see what I mean? So, to me, that means it may not be awesome, but let's say relative to other investments, it's still good. But if you look at the indicators, and I don't mean technical indicators, I don't even mean fundamental indicators really, but one thing I like to look at is, yield curve. Yes, the yield curve is flattening, but it's not a place that I'm concerned about. Corporate, there's, banks have been recapitalized, companies have money, the margins are profitable, borrowing costs in the United States are super, super, super cheap. In fact, they're still at, emergency levels. So if you are a company, you wanted to build a factory or borrow equipment or buy another company to expand, the money's cheap right now, my friend. This is a great time. And what about, I don't know, there's just things are okay. You see what I mean? And most people make money when the market goes up. So let's just say at some level, the stock market just generally keeps going up. Okay? Yes, it's fragile. Yes, it's vulnerable. Yes, it could be a lot better. Yes, historically, we expected more. But I don't think we should pay attention to the historics as much as we used to. This is not your grandfather's S&P 500. In fact, your grandfather doesn't even know what the S&P 500 is. All right? But it's not your dad's S&P 500. How about that? So anyways, the new normal is lower, longer. Interest rates are cheap. Credit's available. Banks are capitalized. Corporations are making money. Future profits should be good. Retail sales is improving. We're at near full employment. Wage growth is going up. I mean, everything's okay, guys. There's no need for the crash. You just read too many newspapers and listen to the wrong people. Okay? So let's take this another step. Let's just say, just for argument's sake, even if you don't believe me or disagree with me, let's just say the S&P 500 does go up, and by the end of the year, we're at a higher high, which I've already indicated here. It's nice that we've already done all this analysis, isn't it? Yeah, you're welcome. So let's just say it does generally go up between now and the end of the year. There'll be pullbacks, but let's say generally it goes up between now and the end of the year, the next 6 months. What will happen to the Japanese yen? Okay. So do you want to talk about it or do you want to trade it? You see what I mean? So when I say things like that, I need you to click. I need you to click because I honestly don't feel like it's my job to put you into a trade. I'm not going to tell you what to do because I can be wrong. And you don't pay me any money, so F you. No, come on. I'm sorry. I love you. You're my sweet baby. Right? No. So you gotta learn the process, right? Where's the money going? Where's the money coming from? John's laughing. Yeah. Right. So yeah, when the hammers click, this leads to that, leads to that, leads to that. So like when I say little things like, oh well, I think the stock market's more likely to go up and down. Why? I can back that up with like 9 opinions. Just boom, 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 boom. That's why. Okay, then if the stock market's going up, what else is going to go up? Boom, 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 boom. Right? All of a sudden, lots of things going on. I got 9 trades going now. Why? Because I did analysis and I have one global picture. Okay? So how about cheap oil and cheap money for the next 3 years? Yeah, that'll crash the stock market. Right? Just think about it on the basics. The absolute basics. Energy to run your factories and to deliver your products are going to be cheap. So your costs of doing business are low. Oh, and the money you needed to run your business, like buying inventory, that's also going to be cheap. Meanwhile, consumer spending is going up slowly because wages are going up and everyone's had a job now for a while. Economy is slowly improving. What, in my opinion, that says not down for the stock market. And by the way, when we had that 10% pullback, I told you in the heat of the battle where the lines of support were, to stay calm, to stay focused, to look at it as an opportunity, and to do what you think is right based on where you believe the stock market is going to be at the end of the year. How many people can verify that? When there was blood on the street, 10% decline in the stock market in 3 weeks. Oh, it's the end of the world. I said, this is your opportunity to act like smart money. You want to be smart money? This is your opportunity to be smart money, right? Do you remember I told you my friend had come over to my house and we're, again, smoking cigars, and he's freaking out. He's like, oh man, my portfolio. What am I going to do, Wayne? Remember that story? I said, you're going to do nothing. You're going to thank me for it. And by the way, I get angry when you hire wealth managers and they do nothing. That bothers me, right? The stock market's down 10%, 20%, 30%, 40%, 50%. Your net worth. In that case, the stock market decline, we were at support. And I think we got to the point where if it went like 1 or 2 more days down, it would have been a significant opportunity to get out, right? So put it all together. Does it feel like it's crashing? And if so, prove it. Okay, that's it. Prove it. What do you got, baby? Oh, Wayne, the stock market's going to crash. Good. Prove it right now on paper. Give me 5, 6, 7 reasons why it's going to fall. Should be easy enough, right? Alan says, okay, Wayne, there are some global risks from China. All right. And what are these risks for us, the United States of America? 70% of our economy are consumers. The risk is what? They're not going to sell us stuff we want from them? See, their risk is that we don't want to buy their stuff. Okay, so we have Lou and Grandpa. What the hell's his name now? Bob Dole? No. John Kerry. Sorry. So we got Kerry and Lou in China right now. So Bushan says on the S&P 500, 5-way up into 3-wave correction. I'm fine with that. Especially Bushan, if you add it so that we're longing in the third and fourth quarters. So like a September, October, November rally. So if we can get a 3-wave correction by then, I'm happy. I'm cool with that. Okay. Just to fold one other thing in. We are hearing a lot about Japanese yen intervention by the Bank of Japan, right? Therefore, I'd much rather be buying dips because just one day you might find yourself on the correct end of a yen intervention. And it's happened to me on a couple of occasions. But I think you guys remember one story where I was coaching when I was running FX boot camp, and I had something like 30 open positions, and I'm in the middle of coaching, and all of a sudden, boom! They were all up 300 pips more, each one of them. And I'm like, holy crap. It was great. I don't remember if it was yen or Swiss franc or something like that. And then, of course, I've been on the bad end of intervention as well, right? Yeah, Genesis says we'll always buy Chinese stuff because they're so good and affordable. Well, you know what? India is going to win that war. We have a long ways to go. We haven't even started to develop India. India doesn't even have storage facilities for water and grain. I mean, come on, even the Egyptians 5,000 years ago had more infrastructure than India does now. 97% of the Chinese population have access to electricity, and it's only like 60 or 70% for India. I mean, when you walk through China and you see what China has done, okay? China in the last 5 years has used more concrete, cement, right? Has used more cement than the United States has used in the last 100 years. They have electricity, they have internet, they have infrastructure. I'm in the subway system of Guangzhou, and the signs have English on them. Holy snap, right? What a beautiful place China is. I've been to Chengdu and Beijing. I was on a magnetic levitation train in Shanghai, right? Been to Shenzhen, Guangzhou, been all over China. It's awesome. China's awesome. Go to India. Oh, good luck with that, dude. Good luck with India. Holy smokes. I've been all over India too, northern India, central India mostly. In Rajasthan. Have you ever been in Rajasthan in the summer? Oy vey. Right? There's so much money yet to go into India. It's amazing. And did India have a one-child policy for a whole generation? No. So China's going to get expensive. And remember when Japan used to make a bunch of cheap crap for the United States, pardon my French? And America loved it, right? Because they'd get all their stuff made in Japan, but they couldn't make anything valuable. But all of a sudden now they make the best cars and they make great computers and great TVs, right? But then so we look to South Korea to make our cheap crap, right? After the Korean War. But now they make, they make cars. I wouldn't call them good cars, right? They're better at making cars, but best cell phones, best TVs, so on and so forth, right? So now, and best servers, you want server infrastructure and stuff. South Korea does a great job of that. So then what do? Then we start moving to China. Hey, China, make all our cheap stuff. Make Bart Simpson t-shirts and beach chairs and umbrellas and all that kind of stuff, right? Well, that's going to change. They built all this infrastructure. The capacity for industry there is huge, and the quality has gone up, a millionfold. So who's next in line? Yes, I know, Debista. Yeah. Right? India's next in line. And I'm telling you, when Daniel and I were walking through a train station, a beautiful train station in Shenzhen, that's what I mentioned. We were talking about it. I'm like, wow, look at all the money that's gone in here. I said, but the real story is none of this exists in India. None of it. Imagine the opportunity to make money in India, to build the ports, to build the railways, to build the subways, to build the entire infrastructure. Just everything, water, power, roads. Oh man, it's just overwhelming, the amount of money that's still going to go to India to really bring that to the next level. So you can be involved, is what I'm saying. So you missed the whole China thing? I remember when the WTO dropped all the barriers and stuff, and I remember thinking, wow, it's going to be amazing. But amazing. Yeah, Sally Pup says, imagine they would do that in the United States. Yeah. Yeah, to be so, well, that's what they said about China, right? Imagine the challenge of turning communist China into capitalist China. I call that World War IV. The last two world wars were fought with money, not with bombs. Right? The United States broke the back of the Soviet Union with money. We outspent them until they starved in the streets. And then we defeated communist China and turned it from socialist pig dog communism to capitalism. So World War III and World War IV have already been fought. Now we just need to defeat Cuba and Venezuela. All right, so I don't know, where are we? I've lost my mind. Where are we going now? Boy, you guys get me sidetracked so easily. So you're going to trade Mexican consumer confidence? Is that what's? How about Russian CPI? Both of those coming out soon. Okay, are you picking your lines? That's too far out. I'm trying to catch. One of these isn't pivot. It's this one. All right, so pick your lines. Okay, if you were a bear, this is your sell zone. Well, this is M4, right? Isn't that amazing? So where's the next sell zone if you're a bear? I'm going to put it up here because it'll take a while if you're a bear to shake the news out. But you have weekly M4, monthly R1, weekly R1. So I'm going to say 115 is going to be the next one. Okay, 115. Oops. Okay. Okay. Now, if you're a bull, what is the buy zone based on pivot points? What's the best pivot point to buy if you're a bull? To start your upward trend? No, not weekly central pivot point, wrong. M2. M2 for the month just happens to be our exact bottom. Right, James? James bought right here. $111.11. You took profit with 50 pips profit, and I yelled at him. All right, here it is now. We're up in here. Now he knows. Yeah. Oh, James is a good, good analyst. So anyways, it'd be very interesting if we kind of rounded this out here, right? But if M2 is your bottom, M4 is your target. Is it possible the Fed doesn't raise interest rates next week? So what if we get one of these? Right? It's plausible, isn't it? So one of the things that James and I talked about is like what happens if the NFP comes out bad and prevents the Fed from raising interest rates. No joke. That was what we talked about on Monday of last week. So then you're going to be on the winning side of a great trade if you hadn't taken profit with 50 pips. All right? So when it's the first day of a month and you're on a key pivot, play it for the month. And this is a message for everyone, right? No, but everyone needs to learn, right? When you start the first day of the month, do your analysis on the pivot points. And if you find yourself near a monthly pivot as support or resistance, create a trade plan for the month. Okay? Yeah, these are monthlies. And this is up here, M4, monthly M4. So in this case, if things all go correct, and very often they don't. So in this case, you give up your 50 pips. I don't care. The 50 pips isn't going to change your life. Okay? You need big winners from time to time, not every time. But when you have a setup, I want you to take the shot. So when you're up here, at least you have the opportunity to move your stop to break even. And if things turn out correct, you get paid huge. Now this is less than 500 pips, so it's not even that big of a deal. But, when you got the good setup, you should let it run. Let the winners run. Let the winners run. Okay? And on the long run, you would think that the USD yen is going down in a blaze of glory. Okay? At some point, I don't see why we can't break parity. I think we already have a plan, maybe not on this one, but somewhere I have a plan of this going down to like 88, I think it was, wasn't it? Oh, there's the monthly M5. That's so funny. Those are total misprints. Weird. So yeah, why not? We can go to parity. Why not? Just probably not today. Okay. If you are a bear, are you going to play the weekly M3, monthly M3? That's another play that you could do here. I would hope it would still go up a little higher to be even more overbought and then drop. But if you're a bear, shouldn't you play the 618 cluster of M3, M3? See, there's a monthly M3 and there's a weekly M3, right? Monthly and weekly M3, which means your target is monthly and weekly. Well, because this top is monthly M2. Monthly M2 is our bottom. So we've actually already done that. So I don't know, maybe down. And then, so weekly M1, oh, it's about the same anyways. Yeah, so the target is for it to come back here, but of course if it did that, it would have to make the lower low. So I'd almost say support. So back down to 109 is how you would play it here if you're going to try to catch this cluster. Okay, see it? If you're going to try to play that. My guess, though, is it's going to get caught up here. So, as you can see, not straightforward, easy to do, especially when the market's waiting for Yellen. And Yellen could bring this down 100 pips. Yellen could push this up 100 pips. So make sure you do what you want to do and then have a stop placed appropriately. Okay? And then after tomorrow, I think we're going to have a lot more technical analysis to do. Because right now, we're still at elevated extremes based on the response to non-farm payrolls. And now we need Yellen to tell us what it all means. What does it all mean, Basel? Okay. And then so tomorrow I think we're just going to do a lot of technical analysis and don't throw me off with wild questions. Let's just bust out a whole bunch of plans, huh? So I got a super busy day. I gotta go, but much love to you, babe. Let's meet up again, same time, same place tomorrow. Will you be here? Awesome. Thank you for your loyalty. Do you still have a recording of Thursday? Didn't I upload it? It should be on YouTube for sure. Really? Thursday? Really? All right, well, let me talk to the powers. Let me talk to the circle of guardians and see if we can go back into the past. All right, so I'll see you tomorrow. Thanks for being on my team. I appreciate you.